Hey, welcome back everyone. So today we're going through a portfolio update of my portfolio. Currently we're sitting at $114,000 in this portfolio with a nice 1.35% gain so far today. And yeah, we're going to go through all the stocks I'm currently holding and why I hold each stock and what I hope for in the future. So let's get started. The first stock I have is AMD. AMD right now I have a total return of 25% and an average cost of 127. And I really like this company, and I'm gonna explain why right now. So AMD right now, why I'm holding this is because I believe that it benefits greatly from global demand for high performing computing, and then it has a strong position in CPUs, GPUs, and data centers. And I really believe that if AI is gonna start growing, there's gonna be more demand for the CPUs, GPUs, and data centers. They have a competitive performance compared versus Intel and Nvidia at lower price points, especially when the MI350 and like MI400 comes out. It's go like those chips are going to compete with Nvidias, and they're going to be like the cheaper alternative. So companies that are looking for these GPU, CPUs, and stuff like that are going to be like, yo, we got a competing product and AMD is cheaper, so I'm gonna buy AMD stuff instead, which will greatly increase AMD's revenue. Um, Also, it has growing market share across PC gaming and stuff like that. Especially in the gaming community, more and more people are buying like Ryzen chips and like switching to AMD slowly instead of having Nvidia GPUs. It's also very efficient fabless model utilizing TSMC. Its data center and AI demand are major long-term growth catalysts, and it's also really highly competitive. And I believe that AMD will be well positioned for innovation scale in the next couple of years. All right, so the next stock that I'm currently holding is Nvidia. So with Nvidia, I have an average cost of 117. It's a portfolio diversity of around 18%, and right now I get a great total return of 47%. Amazing. I bought most of my shares during the April. I was able to grab a lot of shares, like more than half of my shares during the April drop, buying it at an average cost of 105, and I slowly bought more as like the prices went up. Price went up, and yeah, we're gonna talk about why I'm holding Nvidia. So why I'm holding Nvidia? Nvidia is the backbone of AI infrastructure. But if Nvidia is considered the backbone, so why am I holding some AMD and not just all Nvidia? It's because Nvidia has a market cap of 4.21 trillion. It is huge. So it will start slowing down growth because of big numbers. Because the bigger you get, like it's harder to beat like exponential acceleration of growth. So that's why AMD is like market cap of like 250 billion, if I'm correct. Hold on, let's see. Hold up. I can actually check right now. I wrote it here. Yeah, 275 billion around right now. And I think it'll just grow faster than Nvidia, to be honest. That's why I'm mostly in AMD, but I'm still holding some Nvidia. It gains a lot of money, which will greatly support buybacks innovation. And the only real major threat is like government export controls, the like Trump saying like, "Yo, you can't export to China." But recently they were like, "Yo, you're allowed to export." So like, I think it'll be a great investment for the long term. And yeah, now it's to the next stock. All right, so the stock that I'm also holding is Super Microcomputer. I have around $10,000 worth so far, a return of 37%, and it's around 9.89% of my portfolio. I bought average cost of 38. I bought most of my SMCI. It was before the crash, which was unfortunate. But well, it wasn't crash. I wouldn't call it correction. It was before the correction. So unfortunately, I couldn't buy a lot of SMCI shares when they were like 28 bucks. But I still think it's still a great investment for the long term, and I'm about to tell you why. I believe so. Why I believe it's a good investment for the long term. All right, so I believe SMCI is one of those top enablers of AI compute infrastructure. It builds AI server racks for like companies like Nvidia and AMD and other hyperscalers. It has hyper customization and speed to market, which is a key differentiator. It also benefits from growth in data centers and AI adoption. So when AI becomes like so strong and needs more data centers and more server racks, we have SMCI to cover that demand, supply to demand. It also outsources manufacturing, which keeps capital needs low. It has aggressive growth fueled by AI boom, and then its competition and reliance on component vendors are pretty little risky for SMCI. I'm gonna be real with you, but yeah, I'm gonna just keep holding SMCI for the long term, and I'm planning to hold until like I don't know. We'll see whatever the future holds. To be honest. All right, the next stock I'm holding is Big Bear AI. Well, let me move my camera a little bit down. There you go. All right, so a Big Bear AI, amazing, bro. Average cost of 292, and I have a total return of over 176% so far. And then I've been only holding this stock for like a few months now, which is amazing. So why am I holding Big Bear AI? It provides AI decision-making softwares for defense and logistics, which I think in the future, if AI gets good enough, it'll be really used for like all these cameras and stuff for like airports, which I think will be pretty cool, pretty dope, not gonna lie. It has contracts with US government and military, which is its core base of revenue. It's focused on autonomous system cybersecurity and predictive analytics, and it's a smaller player in the AI server space. So I think I'm not suggesting investing is now because it's such a high price currently right now, and we don't know what's gonna happen. But I've been holding this for a while because I believe that it's a small player in the market, and then if I invest early, in the next few years I'll really reap in the benefits from investing into this company. Yeah, it's very speculative with potential upsides because of government contract scales, but it is burning cash. It's not. I don't think it's profitable currently. It's just lots of money being used right now. And then yeah, it's high risk, high reward. Dilution and execution are key concerns, which is very much true of Big Bear AI. But I'll be holding on it for a while now. Yeah, for some reason, I don't know why my mind blanked, but Big Bear AI is not profitable right now. Just to let you guys know. All right, now we have our next stock, which is Dell. Dell, I'm currently have an average cost of 97 with total return of 27%. I have recently sold half of my Dell stocks because to invest in AMD because I think AMD will grow faster than Dell. But I'll talk about why I have some in Dell still. So Dell is a key player in AI hardware at scale. It's leading vendors of NVIDIA power AI servers and storage. It has a deep enterprise and government relationships, support growth, and end-to-end stacks from PC infrastructures and services. Like for me personally, like whenever I go to like a bunch of offices and stuff, I always see Dell computers everywhere. I don't know if it's just me, but I always see Dell computers in gas stations. The little monitors they have are Dell. I've been seeing Dell a lot, so I believe Dell is still a very important company. Very, not just because of that, but you know, anyways. It's cash generating business with strong shareholder returns. Its PC market is cyclical, but infrastructure demand is strong and rising, and AI tailwinds could lead to multiple expansions if sustained with Dell. And also, Dell, you also get some dividends back too, which is a pretty nice addition to Dell. And the last stock I'm here to talk about is Adobe. Adobe, I have an average cost of 374. I'm currently now at a loss of 2.4%, but I think that's okay, to be honest. This is just going to give me an opportunity to buy a little more shares after this video. But Adobe. So Adobe has been eating some L's this past year, not gonna lie, but I think it's extremely undervalued, and I'll explain why. Alright, so the Adobe overview. So Adobe dominates the creative and document software markets. Its flagship products like Photoshop, Illustrator, Acrobat. There's also, I think Premiere Pro is one of them, if I'm not mistaken. One of their editing softwares I know is super popular in the YouTube space, as I talk with many I have many Roblox streamer friends that use Adobe's editing software. Also, its transition to a subscription model creates consistent high margin revenue. which I really like the subscription thing because it's just cash going in and in and in, and then those people that use Adobe are very loyal to the company too. Adobe also experienced cloud taps into the digital marketing growth and its AI features, which is like Firefly, which uses the integrated into creative tools, which increase like stickiness of like people wanting to stay with Adobe because of their AI tools, especially like on Photoshop. They have all these like AI things to make photoshopping a lot easier. Its strong free cash flow enables shares, buybacks, and innovations, and its competitions from Canva and Figma are growing also, but it's manageable since Adobe is such a strong company, and I believe it's extremely undervalued. Also, just want to let you guys know before you make any like financial decisions, right? Be sure to do your own due diligence. Because this video, right, I just talked about like overviews of why I think those companies will do in the future, but I didn't go through like if they're profitable or not, if I didn't look at their balance sheets, stuff like that. And yeah, just be sure to do your own due diligence and research of each company before investing. And also, if you have not, be sure to join the Discord. I made this Discord recently where we talk about investing and stuff. We got like 12 people in there right now, which is honestly I think it's amazing. I already got 12 people. And yeah, I'll catch you guys on the next video. See ya.